All right. What is up, tycoons? What's up, traders? We're going to talk about Merck today, ticker symbol MRK, and how it's approaching the accumulation phase with an expanding product portfolio. All right. So, in key summary of today's video, Keytruda sales totaled over $5,795 million in Q1 of 2023, up 17% year on year, thanks partly to an increase in its indications for use. At the same time, Robert Davis does not actively use the share buyback program, and in the first quarter of 2023, Merck repurchased its shares for about $149 million. At the end of the first quarter of 2023, Merck's total debt was around $30.75 billion, a decrease of $3.8 billion from 2021. And however, due to the declining AI hype in the media, we expect the S&P 500 to drop to about 4,300, eventually driving Merck's share price back down to 104, 105 within the next 2 months, after which the accumulation phase will begin. And we've got an outperform rating on here on Merck over the next 12 months. So be sure to smash that like button, subscribe to the channel if you guys are new. We're going to break down everything in today's videos, from some of the fundamentals and even the charts. Okay, so we're going to look at the daily chart time frame right here, give you guys a little bit more of a macro chart right here. All right, we're going to go over a lot of good indicators such as the RSI MACD, the key levels that I'm really paying attention to right now. All right, and then if we zoom in here on a smaller time frame and take a look at the anchored VWAPs, right now we are above all of our anchored VWAPs. I'll break down what that means in the short term. So be sure to stay tuned to the end of the video, because that's when we're going to cover the chart. For right now, we're going to dive deeper into some of the fundamentals. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the full disclosure here. Now, there is a link in the description below for today's sponsor, Simply Wall Street, or you can check the pinned comment down below. It's a really great platform that I've used for a while, and I'm glad to have them as a sponsor. You can get a 14-day free trial or up to a 40% off your purchase. So that would put it at under $200 for a full year subscription. And it's really awesome. Okay, it dives greatly into fundamental analysis, makes it very easy for beginners and newbies alike. Okay, and even if you're a seasoned stock market veteran, maybe you're not a true pro at fundamental analysis. Okay, Simply Wall Street has their pros and their professionals breaking down the fundamentals, showing you guys the price to earnings ratio, price to sales ratio, as well as many other things with some very nice graphs and charts to make things very simple to understand. Very awesome platform. Now, as always, you guys can email me too for one-on-one Zoom coaching sessions at ZachlyTrades@gmail.com. And we can work on setting up a time if you guys are interested in some personal coaching. Now, on April 27th, all right, one of the leaders in the pharmaceutical industry, Merck, released its financial results for the first quarter of 2023, which not only continued the trend of Wall Street's analyst expectations, but also made us to demonstrate that the demand for anti-cancer drugs, which account for 44.1% of the company's total revenue, remains high. At the same time, the company conducts business in two operating segments, animal health and pharmaceutical, whose product sales accounted for 87.8% of Merck's total revenue in the first quarter of 2023. And that's what we're seeing here in this nice chart. Now, at the same time, the five largest shareholders of Merck, with a combined share in the company equal to 27.16%, have long been such Wall Street mastodons as Vanguard, BlackRock, State Street, Wellington Management, and Geode Capital Management. As a result, this is one factor in their confidence in Merck's bright future, despite the looming pressure from President Biden's Inflation Reduction Act. Now, due to quarterly and year-on-year revenue and net income decline since the beginning of 2023, Merck's share price has shown a marginal decrease of about 2.7% behind other major healthcare company competitors such as Eli Lilly, which is ticker symbol LLY, Novartis, ticker symbol NVS, and Novo Nordisk, ticker symbol NDO. But even with that being said, Seeking Alpha actually has an outperform rating over the next 12 months on Merck still. Now, Merck's financial position, all right, if you take a look here, their revenue for the first 3 months of 2023 was $14.49 billion, up 4.8% from the previous quarter and down 8.9% from the first quarter of 2022. At the same time, the company's actual revenue has beaten consensus estimates by Wall Street analysts in the last 8 out of 9 quarters since the introduction of COVID-19 vaccines to the market, which have played a significant role in the fight against the virus and the return of people's lives to normal. And we can see that very nicely on the graph here, a nice, bar chart we've got. Okay, showing the gross profit margin, the consensus revenue estimates in red, and then we take a look at the actual revenue in black here, and you can see it's just absolutely smashing it. Now, despite quarter-over-quarter revenue gains in the company's two operating segments, animal health and pharmaceutical, declining demand for Ligrevio, all right, which is approved for mild to moderate COVID-19 treatment, continues to affect the company's total revenue negatively. Thus, sales of Ligrevio, okay, amounted to $392 million in the first quarter of 2023, down 87.7% year-on-year due to a sharp decline in the number of COVID-19 cases in Europe and the United States, and maintaining intense competition with Pfizer, which has some efficiency advantages. However, we believe that the impact of this drug on Merck's total revenue will continue to decline and reach double digit by the fourth quarter of 2023. In addition, as expected, the decrease in the company's revenue in the first quarter of 2023 was affected by the loss of exclusivity of two medicines, all right, as a result of increased competition with their generic versions in the countries of the European Union and China. Cumulative sales of these drugs approved to lower blood sugar levels in patients with type 2 diabetes were $880 million in the first 3 months of 2023, down 28.6% year over year. What's more, investors should consider that around 25 pharmaceutical companies are likely to be able to start selling generic versions of Januvia and Junumet in the U.S. as early as 2076, putting additional pressure on Merck's diabetes franchise. Despite this, Merck's Q2 2023 revenue is expected to be $14.29 to $14.55 billion, up 4.5% from analyst expectations for the first 3 months of 2023. Now, with the improvement in the company's financial position, will continue through the expansion of the oncology franchise, in particular through Keytruda, which is one of the best-selling drugs in the world and whose mechanism of action is based on blocking the PD-1 pathway. Keytruda sales totaled 5,795 million in Q1 of 2023, up 17% year on year, thanks partly to an increase in its indications for use. In addition, the demand for Merck's products for treating patients with head and neck squamous cell carcinoma, renal cell carcinoma, and early-stage triple-negative breast cancer and melanoma is growing rapidly. Unlike Keytruda, sales of PD-1 inhibitors such as Bristol Myers Squibb's Opdivo and Regeneron Pharmaceuticals, I can't really pronounce all of these things, okay, but basically those are all remaining sluggish, okay? If you look at Keytruda here and you look at the others, all right, they're remaining sluggish compared to Keytruda, all right? Now, their EPS, all right, if you take a look at the EPS actual, that's going to be in black, all right? This is their earnings per shares and the EPS estimates. They've been beating the EPS estimates ever since Q3 of 2021. All right, and their operating income margin as well is on here in blue. Okay, that's going to be that blue line for you guys. Now, Merck's gross margin was 73.1% in Q1 of 2023, a significant improvement from the previous year due to lower raw material prices and a sharp decline in sales of Ligrevio, which has a low gross margin. Moreover, this financial indicator is higher than that of the healthcare sector, but also that of such major companies such as Takeda Pharmaceuticals, Novartis, and Johnson & Johnson. Another factor attracting investors to choose Merck as a long-term investment. All right, and forecast that by 2023, Merck's gross margins will reach 77.5%, and by 2024, this figure will increase slightly to 78.2% thanks to lower inflation and the company's drug portfolio expansion. Merck's operating income margin in Q1 of 2023 was 27.27%, continuing its downward trend that started in Q1 of 2022. The company's earnings per share for the first 3 months of 2023 was up $1.4, up 13.6 quarter on quarter, and last but not least, it continued to beat analyst consensus estimates in recent quarters. Moreover, Merck's Q2 EPS is expected to be in the $1.77 to $1.97 range, up 38.1% from the Q1 2023 consensus estimate. At the same time, Merck's non-GAAP PE trailing 12 months is 16.23 times, which is 14.29% less than the average for the sector and 8.63% higher than the average for over the past 5 years. Now, one of the main reasons for beating EPS is due to the high sales of Gardasil 9, Vaxneuvance, and Keytruda. At the same time, Robert Davis does not actively use the share buyback program, and in the first quarter of 2023, Merck repurchased its shares for about $149 million. At the same time, at the end of March 2023, the remaining authorization to buy back Merck shares amounted to $4.9 billion. Now, despite the significant amount, we believe that the company's management will continue to pursue an active R&D and M&A policy instead of artificially using cash flow to support the price of Merck shares. Moreover, this policy continues to meet Mr. Market's support in the current geopolitical instability period. All right, and you can take a look here at the total common shares outstanding over the past couple years, as well as the repurchase of common stock. And you can see they really haven't been doing any repurchasing since Q4 of 2021. And we finally got some in Q1 of 2023. Now, at the end of the first quarter of 2023, Merck's total debt was about 30.75 billion, which is a decrease of 3.88 billion from 2021. However, despite a slight decline in EBITDA in recent quarters, the total debt to EBITDA ratio fell from 2.04x to a record low of 1.37x for Merck. Right, and you can take a look at their total debt here, and then their total debt to EBITDA ratio is going to be in that red line right here. Okay, now given the maturities of the debentures and senior notes, we do not expect Merck to have any problems with their redemption, and Robert Davis will continue to pursue an active R&D policy to maintain a leading position in the global oncology drugs and vaccines market. Now, on April 27, 2023, one of the leaders in the pharmaceutical industry, published financial results for the first 3 months, which not only continue to beat analyst expectations, but were able to demonstrate that demand for cancer medicines such as Lynparza, Keytruda, and Lenvima remains strong. Moreover, the company's management continues to pursue an active R&D policy, which is reflected in the relatively rapid expansion of the portfolio of product candidates. The most promising and potentially bringing in hundreds of millions of dollars a year to Merck are MK0616, sotatercept, belzutifan, and PRA023, which are being developed to treat various immune-mediated diseases. However, due to the declining AI hype in the media, we do expect the S&P to drop to about 42 to 4,300, eventually driving Merck's share price down to the 103 to 104 area in the next couple months, after which the accumulation phase will begin. Now, let's actually dive deeper into the charts here, okay? And we're going to start off here with the anchored VWAPs, all right? And so if you're not too familiar with the anchored VWAPs, basically VWAP just stands for volume weighted average price, okay? And the anchor, all right, you can anchor them to specific time periods. So for here, we have the monthly, all right, in yellow, we have the week in white, and we have the year in blue. And you can see we're above the yearly, we're above the weekly, and we're also above the monthly. Now, this indicates short-term bullishness, all right? Typically, when you're above, your anchored VWAPs, it's basically telling you that people are in profit in all time periods right now. So in the past year, the average shareholder is up on his money. In the past week, the average shareholder is up on his money. And in the past month, the average shareholder would be up on their money. So this suggests a little bit more bullishness short-term, okay? Now, if we go ahead and take a look here on the daily chart and take a look at a little bit more of a macro perspective, we are very close to getting a buy signal, okay? If you take a look at the MACD right here, which the MACD is a lagging indicator, and then you look at the RSI, which is a leading indicator, okay? So there's leading and there's lagging indicators. Leading are going to tell you kind of, what's happening right now. And then the lagging indicators are going to give you signals based on the data after the data has been made, right? So for instance, what we're seeing here is something known as bullish divergence on the chart. And we're going to be looking for a lagging indicator on the MACD for a buy signal. Okay, so if you take a look here, we have a low, and then we created a lower low at this time. And if you look at your RSI, that leading indicator, we had a low, and then we have these higher lows right here, right? So the RSI is actually going up, right? We're increasing in relative strength as price is making lower lows in this area, going down. This is a simple term known as bullish divergence, okay? And we can see over here, we did the same thing before as well, right? We had a low here, and we had a lower low here, and we had a low, and then we had a higher low. And what we did was we created bullish divergence where we're increasing relative strength as price action is going lower. And then what ended up happening was we ended up getting the MACD buy signal here, where the red line crosses above the yellow line. And so if you take a look right now, the big question is, are we going to get the MACD to give us a buy signal? Now, remember, this is a little bit of a lagging indicator. So we're going to see, does it actually lag? And, are we going to see continued bullishness in the short term and bring us back up to those higher prices? Now, remember, when we look at the short-term chart here, okay, this is the 1 hour time frame, we see that we're above all of the anchored VWAPs, whether it's the weekly, the monthly, or the year to date. So that's suggesting a little bit of bullishness. Now, we're not very much in front of them. And if we take a look, the only one that's really curling upwards is the week to date. Okay, the white one. The rest of these are flat, indicating that it's not in a strong uptrend and we could fall back down below. All right. But if we continue to maintain some bullishness in the short term, we could end up getting a MACD buy signal. Right? I showed you guys what happened here last time we got bullish divergence and a MACD buy signal. We went on a huge rally and we put in this nice rounded bottom. And here we're trying to put in a nice rounded bottom. Okay, we've had a nice rounded bottom here, MACD buy signal, nice little rounded bottom / inverse head and shoulders right here, MACD buy signal. And we're going to see if we can continue to hold this bullish divergence trend line on the RSI. If we do break this bullish divergence trend line, then there is a strong chance we see a pullback in the stock. Now, ultimately, from a macro perspective, we're looking at a major move from this swing low to this swing high, right? So we have this huge move up. And even if we pull back all the way here to 97.89, this is all healthy retracement territory to potentially continue the uptrend, right? These are our major Fibonacci retracement levels here. All right, we have the 38.2, 50%, and 61.8. These are the three most common and well-respected fib levels. And the price levels at those specifically are going to be 106.20, 102.05, and 97.89. So really, even if we pull back down here, we're not really going to be ultimately bearish and looking for a potential reversal on the macro scheme unless we break below 97.89 and flip that to resistance from support. If we do that, we have a gap down to 96 and we also have a gap down to 89 that we could end up filling. So you'd want to be cautious right around those areas. Now, short term, okay, our major resistance levels are going to be here at 111.92. 113.42 and 114.92. If we can break above those levels, then we have a chance of getting 100% retracement, retesting our highs here right around the 120 level, and potentially even putting in new highs on the stock. All right, we have this nice trend line here as well forming. It'll be interesting to see what happens here. If we can get a breakout of this trend line, all right, you need to be cautious of a look above and fail, all right, and, basically a rejection right around this 115 area. The reason that a look above and fail is significant is because at this moment on the breakout, bulls have the full opportunity, buyers have the full opportunity to get a retest and push up higher and show that they're in control. And if they fail and we come back down into the range, it's going to show you guys that this was a fake out, right? A false breakout, and that bears are actually in control, and they're going to push price lower down towards the bottom of the range. Okay, so that's really everything that I'm looking at on Merck. Okay, we dive into the fundamentals a little bit. We looked at a shorter term time frame, see that, at the moment we do have a little bit of a short term bullish trend. All right, but we know our major levels to the downside of support to continue the macro bull trend. All right, if we break below those, we could end up seeing some of these gap fills down to 96 or 89, and we know that we need to be cautious below 114.92 because ultimately everything, below that level is a healthy retracement from the move from the recent high to the recent lows, right? From the recent high to the recent lows. It's all a healthy retracement territory to potentially continue heading lower. All right, so that's it for today's video. Hopefully you guys enjoyed it. Smash that like button, subscribe to the channel. Don't forget to use today's sponsor, Simply Wall Street, via the link in the description below or the pinned comment. All right, and you can always email me for a one-on-one Zoom coaching session if you guys are interested. The email is ZachlyTrades@gmail.com.